What's up YouTube, Eric here. Today I'm gonna bring you 5 stocks that are priced under $10 a share that I think are buys at these levels and lower for long-term investors. Now these are more speculative stocks, and when you get to $5 or less, you start talking about penny stocks, but all 5 of these companies are companies that I think are quality companies that just happen to be priced under $10 a share. And I'm not saying that the bottom is necessarily in or the stocks can't go lower. I just think these stocks are priced attractively at these levels and lower, so you'd be dollar cost averaging, thinking very long term. Now we've done videos like this before, and the reason that I do these videos, it's not necessarily because I want to buy a stock just because it's $10 or less. Number one, these are quality companies that I think can ride out the storm and that can make you money. I think all these could be bagger stocks with time. There's always risk that you're wrong and you're never gonna be right every single time. But these could be bagger stocks that could give you exponential returns over the course of 5 and 10 years. And the reason I want to cover videos like this is that when you think of fractional shares, not everybody can do fractional shares. We have lots of international members in the community. I'm a fractional share guy and I'll buy a fractional share. Not everybody can. But with that said, there are some benefits to having more shares of stock. For example, if you have 100 shares, that's one contract and you can do something like a cash covered call. So we're going to cover 5 stocks priced under $10 that I think are opportunities at these levels and lower. Let's get into it. Now this first stock we've covered on the channel several times. It got thrown into that meme stock bucket, but this is a quality company. It is growing. It's doing a lot of work, not only in government, but also in commercial. And of course, this first stock is going to be Palantir. Now it's priced right now under $7 a share. It did get briefly under $6 a share. You can see 52-week range, 592. And it was as high as 1682 on the 52-week high. Now it was even higher than that if you zoom out further. And it was way ahead of itself. There was a lot of hype around this stock. I don't think this is a garbage company. I think the stock got way ahead of itself. And I think it's attractive here. If you look at the valuation, it's a medium cap, mid cap, around $14-15 billion. Now, Palantir is a software as a service or a SaaS business, and you use a little bit different metrics to evaluate these. So generally, we like to look at what's called an EV NTM revenue. This is trading at a 5.6x. Not dirt cheap, but when you look at the competition, other companies in that land, in that SaaS land, it's pretty attractive. And at one point, it was much, much higher. Stocks like Snowflake still trade around 15. This is a 5.6. Lots of great things going for them. They don't have the growth of a Snowflake, anything like that. The rule of 40, 33%. You generally want to have that over 40. It's a little bit light. Free cash flow, it's positive, which is a good thing. You want that to be positive. A lot of these SaaS companies are negative free cash flow, and that's not good for this environment. This is positive 11%. And then we look at net base dollar retention. And what that essentially is keeping your customers and expanding your footprint within those customers. So selling more modules and growing your business within those customer bases. Their net dollar retention on Palantir is 119%. That's very solid. That means they're continuing to grow not only with their new customers, but also with their existing customer base. So of course, this company is going to report earnings soon. Earnings season just kind of kicked off today. Last quarter, when you look at the period ending September 30th, 2022, $1.1 billion TTM revenue. Total US growth, 31% from Q3 2021 to Q3 2022. Government business is around $1.02 billion. Now the opportunity for Palantir is going to be to grow in that commercial space. Their business has been focused for many years. This went public, during the 2020, 2021 era. It was a direct listing, not an IPO, not a SPAC, direct listing. But the company's been around for a while and it's been focused on government, and they have a great government business, but really their growth, when you think of the growth of the future, it's going to be in that commercial segment. With that said, the revenue growth in government is up 26% when you look at Q3 2021 to Q3 2022. So this is key. This is commercial revenue growth, 53% year over year. And that's what you want to see as an investor. You can see total commercial revenue growth, 17% here on this number, but 53% year over year. Net base dollar retention, which I talked about, 119%, a very solid number. Total customer count grew 66% year over year. So again, they're growing customers. They're signing new customers, new logos. They're also expanding their footprint in those existing customers. And you can see the trajectory here, 203 all the way to 337. So added 33 net new customers in Q3 2022, with total customers up 11% quarter over quarter and 66% year over year. So this is 12 months trailing September 2021, 115 commercial customers. They've grown that basically in a year from 115 to 228. And that's what you really want to see. And then the average revenue per top 20 customers, they're growing that as well, up 15%. Deals closed up 63%, billings up 47%. But But Palantir, I like this one long. I think that it's beat down. It's one of those that you can add in the portfolio. It could go lower. Maybe it goes to $5 at some point. But I think if you look 5 years out, this is going to be worth a lot more than $6, $7 a share. So check out Palantir. Ticker is PLTR. This next one's a space exploration stock. It's Rocket Lab. And there are a lot of members in our community and Discord that are very bullish on this. You can see it's run pretty hard. It's trading right now at $4.91. The 52-week low on December 28th was $3.48. So you have to be a little bit careful chasing. This was an $11.62 stock. So valuation, no PE ratio, just like Palantir. This isn't SaaS. So we have to look at maybe price to sales, and I'll show you that in a second. This is a small cap stock. It's a $2.29 billion market cap. So with a company like this, if you hold it 5-10 years, this could grow into a $20 billion market cap and be worth 10x on the stock value than it is today. Now, there's no guarantee. And when you think of spec, I generally tell you to invest a small portion of your assets into spec and to have a handful of stocks. You're going to be right on some and wrong on others. Peter Lynch says if you invest $1,000 in a stock, the most you can lose is $1,000. But on the upside, it's unlimited. You can make $10,000 or $100,000 on that $1,000 investment. So the idea is, say you have a $100,000 portfolio, you have 10% of that in spec, so $10,000, maybe you buy 10 stocks. $1,000 in each position, but you have to do what's best for you and your risk tolerance. So Rocket Lab, what's the price to sales? So Rocket Lab today, Friday the 13th, it is at 12.08 price to sales. Now that's not dirt cheap, but it's one of the cheapest levels it's been since the stock was publicly traded. You can see back in July of 2021, it was a 91. That's way too expensive. It got all the way up to 166. That's too expensive. This is the meme stock era. People just buying stocks every day because they're going to go higher. So now you look at it, priced at $5 and say, is 12 price to sales reasonable? I would say that it's not dirt cheap, but if you think of the market cap and the possibilities for growth in the future, it could certainly be a great investment at $5. Again, there's no guarantees and the stock could go to $3 again, but you would be dollar cost averaging and adding and trying to build a position with a long-term thesis. So you need to do some homework and due diligence, make sure you understand the company. Make sure you buy it only if you decide it's best for your risk tolerance. The cheapest it really was on price to sales was a little under 9. So it has run from about an 8.7 to a 12.08. So keep that in mind. So you think of space stocks, SpaceX is going to be the cream of the crop, but it's private. You can't buy stock in it right now. Now, there's rumors that there could be an IPO for SpaceX, and it's probably going to be crazy expensive if it ever comes to the market. So if you look outside of SpaceX and say, where can I invest in something similar that's publicly traded? This is really going to be one of the only options. It's probably the best option, most would tell you. Here are some of their key accomplishments in 2022 as of Q3. They had 3 successful launches. You can see everything on your screen. I'm not going to read it all. They had their 30th Electron launch. They had their 150th satellite deployed. There's a lot of exciting stuff going on with this company, and I encourage you to do some more homework on it before you invest in the stock. The ticker is RKLB. Now this next stock, I interviewed the CEO on the channel, and if you have not seen that video, after this video, go watch it. It's an hour long with the CEO. And this is a semiconductor company that's focused on autonomous electric vehicles and really just automotive in general. You think of regular ICE cars, they're still using more and more semiconductors. Everything's using semiconductors, and if you're looking for a pure play when you think of automotive and EVs, this is a really good option. It's INDI Semiconductor. Now it's trading at $7 a share and the 52-week low is $5.07. So just like a couple of these, it's bounced nicely off those bottoms. It's not the cheapest it's ever been, but it was also a $10.75 stock on the 52-week high. And if you zoom the lens out, it was even more at one point. Not saying that it's a buy just for those reasons. This is only a $1 billion market cap. It's a $1 billion market cap, 1.03 micro cap. And if you look at the opportunity, if you listen to the interview, this was a SPAC. And I think it's thrown in the trash because it was a SPAC and everybody thinks that all SPACs are bad, but they went SPAC for a reason. And the CEO explained in that interview why they went SPAC, and it makes a lot of sense. This is a solid company. The leadership team is high quality. The board of directors is high quality. There's some really experienced people when you think of semiconductors and just in tech in general. And these guys have a nice backlog already. They've got some pretty exciting agreements and some contracts that's going to bring revenue to the books by as soon as the end of this year. So this is one that I think has a lot of runway from $1 billion market cap. I think this could be a bagger stock. I've been talking about this stock for a long time. It's one of my top positions it's actually my top position for spec. So out of all my spec stocks, this is my highest concentration. I have the most conviction in it. I might be wrong, but I've done all the homework I can. I've researched countless hours. I've interviewed the CEO on YouTube. I've done all I can from an investor perspective, due diligence, and I have conviction in this company long term. Now, one thing I want to point out that did cause the stock to sell off in 2022 is they did have some dilution, but they did that for a good reason. They're trying to grow and expand and take advantage of the opportunity in front of them. There's a lot of runway in front of them for semiconductors within automotive, and they're trying to build capital for that. So it's not good. I'm not trying to say it's the best thing in the world, but I've done a lot of analysis on that, and I understand it, and I'm okay with it as an investor. I don't want it to be a habit. I don't want them to do it again, but I understand why they did it. There's a few things they're trying to bake out and grow, and it makes sense. So INDI Semiconductor price of sales as of today, January 13th, is 8.877. So it's basically just under a 9. Now, this was a SPAC. It hasn't been trading for very long either, and this is one of those things that was too expensive. It was a 42 price to sales, a 37 price of sales, November 2021. It's come down all the way to 8. The cheapest I see on here, 8.5, 8. It looks like it got down in the 7s. So, 7, 8 price of sales in that range. I still think it's attractive where it's at. I'd love to see it in the 5s. If you see it in the 5s, to me, it's kind of a pound the table type of a moment. And I'm not saying it can't go lower than that, but if I'm buying this stock, if it gets in that 5 range, I like it a lot. In the 6 range long term, still think there's good opportunity. Again, $1 billion market cap. This could be a huge bagger stock, and you're not going to be right every time, but this is one I'd put in the basket of high conviction for spec stocks. INDI Semiconductor, ticker is INDI. Okay, full disclosure on this next one. I don't think it's a buy right now. Please don't hate me if you own the stock at a higher level. There's reasons for it, and I've covered this stock extensively. I do like this company. I'm excited about it. I do consider it spec, and I made a video, Lucid, the Tesla killer. I don't really think that Lucid's going to take over Tesla. I think it's market share. It's just kind of for fun mostly, right? Here's the thing with Lucid. It got down to $6.09. Now, several months ago, I told the group in chart day that 650 was a target, and I think it'd get to 650 or less. When it got to 609, the chart was really weak, and it looked like it was probably going to go in the 5s. It didn't do that. The market's been running pretty hard. And it's ran like a lot of these stocks that we're covering today. It ran from $6 to $8. Okay, it's down 2.7% today. I personally think that in that $5, $6 range, that Lucid could be an opportunity. It is a $14 billion market cap, $13.96 billion. And this thing was crazy. It was $46. So this was kind of thrown in that hype meme stock type bucket. The company is still burning cash. They're relying on the Saudi government. There's a lot of risks with this company. With that said, Tesla also went through several stages. If you're following the channel, I just did a video on Tesla, and it talked about multiple times how Tesla just avoided bankruptcy. And Lucid could be like Tesla in that sense, where they go through some tough times, but they make it to the other end. Now, this company has to compete with high end. When you think of the price point, $150,000 for Lucid Air, it's expensive. Tesla just cut their prices. I think the Plaid is closer to 100,000. I mean, it's a lot less, 115K versus 150K for a Lucid Air. So you have to worry about competition. And I'm not necessarily saying that Lucid can't make it, but there are a lot of risks as an investor to consider in the valuation and the cash burn, things like that. I've got a Lucid video on the channel. You can go check that out after, and it does really a deep dive about Lucid, talks about the Saudi backing, and it's about a 20-minute video. It's one of my top videos ever on the channel. It has like 40,000 views, so go check that out. It's called Lucid, the Tesla Killer. So again, Lucid is not a buy now. The video title is Stocks to Buy Now, $10 or less. I don't think it's a buy at $8. I think it's one that I want to own, that's on my watch list, that you should watch very closely. If you own the stock, don't hate me, because I'm not saying that you're wrong. This could end up being a huge winner for you, but look at the price of sales. Okay, this is just a simple metric. You can look at cash burn and free cash flow, and it gets pretty ugly if you understand financials. Okay, so if you're a casual retail investor, I know you're investing because you're excited about what could happen with the company, but we just showed you some pretty quality companies for spec companies that were trading at 8, 9, 10 price of sales. This thing's down a lot from its highs, and it's still a 36 price to sales. And I think that is too expensive, even with the future possibilities. It's about risk reward. Now, this thing, another, publicly traded company that's new to the market, July, look at this price of sales. And I don't know if this is accurate, but it was like 9,000, 18,000, 13,000, now 35. So yes, it's a much better buy if you buy it today at $8 a share than it was if you bought it in November of 2021, which according to macro trends here, or YT chart, sorry, when it was 20,000 price to sales, whether it's accurate or not, but this is what it's showing me. So it was really expensive and they had basically no money. It was an idea, no revenue, and they're starting to actually deliver some cars. And we had some news this week about the deliveries, and it seems exciting on the outside, but you dig under the surface and it's like they're still not meeting the expectation. So they have to pick up the pace, and in order to do that, they're gonna have to burn more cash. I think it's an interesting one though, especially if it goes back and retests that $6 level or goes lower. The good news is as earnings improve, if they improve, the price to sales is going to go down as well. So this is one that I might buy later after they've proven a little bit more to me. You don't have to necessarily always be in front. You know, Tesla was a $2 stock and you could have bought it at $20 and still made 500% from that level to where it's at today. So I'm not gonna step in front of this right here, but it is on my watch list. It's high on my watch list, and I'm excited about the potential for this company long term. So it's not necessarily a buy now, but add it to your watch list. This is Lucid. The ticker is LCID. There's one stock left, and it's probably the most aggressive stock that I've ever talked about on the channel. It's a penny stock, and you're gonna wanna see what it is. So before I do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth and check out our Patreon Discord. It's patreon.com/firedupwealth. Subscribe to the channel, click the bell to get notifications, drop me a like, and drop me a comment. So this one's making me a little bit nervous, and I'm having second thoughts, maybe if I should even cover this one or not. Those of you that are in the Fired Up Wealth Discord community know that I've been buying this stock when it was 60 and 70 cents. It's Planet 13. Now this is the epitome of risk reward because it's OTC, it's $1 a share, it's a penny stock, it's a micro cap, it's a $209 million market cap. Now this stock in the 52-week range was $3.50 and it was just 60 cents. So it's $1 a share. You're paying a 40% premium. The reason that I like this one though, if I'm thinking long-term, I've been to Planet 13 in Las Vegas several times. I like the idea a lot. You think of it, it's about tourism and an experience. They've got a cafe in there. They've got a coffee shop in there. They're going to have consumption lounges in there. There's a lot of exciting stuff happening when you think of Planet 13. And these type of stocks in this sector, they've been under a lot of pressure. There's a lot of scrutiny, black market, all that stuff. If there's one stock that really sticks out to me that seems attractive at $1 a share on the planet, because I usually don't even touch, no pun intended, dad joke, I usually don't touch penny stocks. But I've been invested in this one since 2018 when it was about the same price. And I have a feeling at some point this is going to be worth a lot more than $1 a share. You know, even if it goes back to $2 a share, it's 100% return. Now this is high risk reward. You could put you could buy 10 shares for $10. You might lose your $10, but your $10 might be $20. Okay. So I'm not saying that this is for everybody. And I'm not saying that you should necessarily go and buy Planet 13 if you don't have the risk tolerance for it. But I own this stock and I do think that it'll be worth a lot. I own several thousand shares of it. It's in my spec position of my portfolio. It's less than 1%. And I think it's an opportunity at $1 and under. And if it goes back under $1, at 60 cents, I was buying it and people were kind of scratching their head. I'm like, it's going to go back to $1. And here it is back to $1. This kind of stock gets manipulated. It's got low float. So be careful. It could go back to 70. It could go to $1.30. This is a trader type stock, but I look at it as something I want to hold. I've done my due diligence. I've been to their store several times in Vegas. They've expanded now to California. They're expanding other areas. But anyways, this is OTC. It's not for everybody. You might not even have the ability to buy it. The ticker is PLNHF. Thanks again for watching, guys. Don't forget to subscribe, hit like, drop a comment. I appreciate your time and attention. Have a great day. Take care.